Welcome to Ring the Bell Investing with the Masters of Marketocracy.
Tonight, Glenn Brownworth, Dan Wyman, and myself, Tony Mitchell, will talk about the markets and stocks and try to help all of you investors out there. Guys, the market has had a strong start. Where do you think the market's going, and what is your projection for the year? I love the projections. I know there's always hesitation, but Glenn nailed it 2 years ago.
Yeah.
And we will have to review. I know it exceeded my expectation in 2025. What are you guys thinking for 2026?
Well, I was being cautiously optimistic, and I said maybe 6,400, but it finished around 68 and change. So that's the American economy at its best. I'll say that. So I do believe we're going to come into a recession. We're going to come into the later stages of these dumb tariffs and all the other stuff, and our trading partners are going to go the other way. So this year we're going to start to see those effects more. But knock wood, I'd rather have an American recession than a recession somewhere else on Earth. It's like, after last year and what I'm reading about, the companies that actually made, one of the things about earnings growth last year was 75% came from earnings per share, higher earnings per share than just PE. Like, people weren't just buying their stock back. So that means that somebody's making money per their stock, and it's not just the Mag 7, it's not just technology, it's not just AI. A lot of people are actually, benefiting from what's going on. Like, I know that when Elon Musk was building his factory in Austin, Texas, he was using up like 40 or 50% of all the construction capacity in the US. Like, if you wanted to build anything, you couldn't do it because every bulldozer and concrete truck and dump truck in the country or half of them were there. Now that's pretty much done, and now they're spreading out again. And, my understanding is that it's actually hard to find certain construction equipment because there's so many jobs going on right now for all these data centers and everything else that you can't actually find construction equipment. So it's like the other side of the market that you don't see. You need construction workers to build an AI data center, so everybody's maybe getting a piece off of this somehow.
Glenn, you should become a senator because you're a great filibuster out of Washington. You always dance around the question. So the question, Glenn, that was great information. But the question is, where's the market going to go this year? And what's your prediction? So where's the S&P going to end up at the end of 2026?
I'll say, let's see, we're at close to 7,800. I think we could do another. Oh God, I don't even know what the percentage is at that. 7,800.
All right, I got you down for 7,800, Glenn.
Okay.
Dan, I should make it easy and let you take the over or under, but I know what you would take, so let me.
Yeah, I mean, that's it, right? Like, we've had 3 really great years. It just feels like we're due to cool off a little bit. I'm thinking more like the 7,300 kind of range, right? Like, we're going to do a lot of bouncing around and end up just a little higher than where we started. I think that feels right to me. I don't know. I'm certainly hoping that
that's
more
in line. That. What I'm hearing a lot of people say is like low single digits for 2026. They feel good about it, but kind of low single digits. So, I mean, that's realistic. Yeah. I'm sorry. What were we going to say, Dan? I think I cut you off.
I think it is right for people to temper their enthusiasm a little bit, right? I think we've been spoiled the past 3 years. The long-term returns for the S&P are probably, super long terms, probably more like 8-9%. Some people would argue like post World War II, maybe you're at 12% or whatever it is. But you can't just tick off 26, 25, 18, right? Like, we're getting a little spoiled, and it just seems like that the odds are against that happening yet again.
So I'm going to I hope we hit what Glenn said at 7,800. but I'm going to take the middle of both of you guys, and I'm going to say 7,600. And when I was sitting there thinking and projecting, it just popped in my mind that this year is going to be the 250th anniversary of America, which was based in 1776. So this is 250 years. So I'm going to say we're going to finish at 7,600. 76 is going to be the number this year. So we'll see, but we've got our three predictions in there. 7,300 with Dan. I got 7,600, and Glenn's at 7,800.
The market gods and numerology. There we go.
Yeah. I mean, if I said 7,800, that's about 8 to 9%, right? I'm getting my calculation right here. So that's
I think you're a little bit. I think you're just a little bit higher there, Glenn. I think you're probably at about 12, or without doing the math, I think you're probably around 12%. But it's not unreasonable. So I hope you hit it. I hope we hit 8,000. I'm long. Yeah. I think it'll be a good year, and I'm long for sure.
Yeah.
So let's move on. It seems like the market welcomed the Venezuela news, which I was a little bit surprised with. How do you guys think it'll play out regarding how it'll affect the markets?
I felt like it was a yawn. Like the market was up that day, but it was more like a yawn. Like a sector kind of had a little bit of a boost, and I know Mercado Libre was up a little bit because they've been struggling in Venezuela, but it felt like everybody's in a good mood and didn't really care, and it just went up that day. So I don't know. I think the market's going to be paying attention to the downside there, but otherwise it's kind of status quo. It's not going to affect earnings that much. It's not going to affect the outlook for future earnings unless you're, one of the one or two oil companies that might benefit from this. So yeah, I don't know. I'm not really thinking the market's going to focus on it unless there's some really negative news to the downside.
Glenn, how do you feel about it?
Well, there's a 4 million barrel glut of oil right now inside the market. And even though they knocked off some of these shadow tankers in Venezuela, there's so much oil out there. That's why he said the market was a collective yawn. Like there's so much energy. They can't even sell it. Like back in 2020, they had actually peak supply of oil. Back in the 70s, there was this famous paper about peak supply, at 71, and eventually we'd run out of oil. But now there's so much oil, there's peak supply. And in 2020, oil companies were actually paying people to store the oil, because if you don't have that oil constantly moving, you have to literally shut down the oil rigs or shut down the production system. So they actually had a negative cost for oil to just pay people to take it off their hands. So that's why this is just, even if the American oil companies are behind this, which they are, because they like the crude is sour crude, so it's very hard to refine, but the refineries in Texas can refine it. But the thing is, there's so much oil everywhere else, it doesn't make any difference, and they're going to have to spend 10 years to rebuild their entire infrastructure there. You're not magically going to pump out 50 million barrels. Right now the U.S. is the largest producer of oil in the world, and we're the largest producer of finished product of any company in the world, or country in the world, I should say. So right now, what do they do? I think it's 18 million barrels a day in the U.S. It's like whatever comes out of there is basically irrelevant at this point. And this is my opinion, is that this is going to be the year of the battery, and it's going to change the whole energy market on Earth. And that's why this stuff isn't mattering, or it doesn't matter, like things going on in Iran. If that was 1980, people would get worried about the Middle East and oil, but now people are like just shrugging their shoulders. Renewable energy has an effect.
So first of all, I just want to say, so from what you're saying, we could take away that just means lower costs for the American consumers because of all this oil. And that could be good for the economy and put some money into other areas. And that could be a big positive. I was personally a little bit more concerned when I heard the news, and I think this could still be a challenge, but I'm pleasantly surprised at how it's working out. But I do want to follow up, Glenn, on your comment you just made about the year of the battery.
Yeah.
Can you expand on that? What do you mean by that?
Well, the last 5 years, I've watched this technology grow dramatically. And there are so many different technologies that are trying to get away from rare earth minerals or cobalt or other materials that are just a real pain politically and environmentally. So now they're going to start building what's called sodium batteries, and CATL, which is the largest producer in the world, they're coming out with these sodium batteries. It's basically the chemistry and the anode and the electrodes, but supposedly it's anywhere from 30% to potentially 60% cheaper than current lithium ion batteries. And if that's true, over the next 3 to 4 years, people are going to start, you won't be able to resist the value proposition of having batteries in your house, in your factory, in your school, because, one time, I mean, how many people who run coal, how many here run coal in their house or heat their house with wood? Those were technologies that were really expensive at one time. And then people moved on to diesel, or they moved on to natural gas. And this is
So are these sodium batteries, as I'm not familiar with them, are they as good as the lithium batteries? Are they rechargeable? Are they going to last?
one of the biggest issues with batteries is temperature. So when you drop below, say, freezing, batteries start to act very strange. Even gasoline turns into gelatin like below 20 or 20 below. So these batteries, they've had breakthroughs where they can stay functional at like 30 below zero. So that's an important thing. You also need batteries that could go up in airplanes or, electric aircraft that's coming. So that's why this technology it gives the US a chance to build batteries that, it's not just our country, the Japanese, the Koreans, everybody else is doing this right now.
You rattled off CATL. Is that a ticker for a company that's making these?
That's Chinese. However, they are on the blacklist from the Department of Defense. So you might want to go find another company. But the idea is that even, do the Chinese companies care about the American oil companies, right? Nobody does. If you said your car could get 50 cents a gallon, you would go to that proposition. But it's not always the consumer. It's the business person who has a fleet of 1,000 vehicles, right? And they could switch to this power. That's why the oil, the petroleum, or the fossil fuel industry is going to have a lot of turmoil this year, because there's going to be alternatives from solar and batteries that are going to shift the whole energy business on Earth. But if you look around your area, wherever you sit right now, everything around you is made from petroleum. So I don't worry. Yeah. They're not going to lose money. They're going to still make money off of plastic and everything else. But the energy business is going to be in for a major change, I think, this year.
Well, Glenn, I'm going to follow up next month and ask you to give us a good American company that's using this technology that we should be investing in.
All right. Schneider Electric. They're one of the largest battery and electric suppliers. And what Schneider Electric is, you have probably one of them under your desk. They make APC UPSs. But they actually bought them years ago. And now what they're doing is they're providing the power for all the data centers out there. That's one of the big things.
Well, and you are correct. I do have one under my desk. So
there you go. It's one of those things that if you want an AI data center, you need an incredible amount of power, and you're going to have it clean. It has to be clean power.
Do you know what the ticker is for Schneider Electric, Glenn?
I think it's SCHR, but I can check on that for you.
Okay, we'll come back to that. But this has been very interesting, and that's some great information there, Glenn. Yeah. We appreciate that. We'll move on now, though, to talking about the banks. The banks always start the earnings season off, and they'll be kicking it off this month. There seems to be a lot of optimism around the banks for this year. Are you as optimistic as the street seems to be? And what would be your favorite bank to play? Dan, you want to start with that one?
I worked in banking at certain points in my career. I never get too excited about the banks. It's the most opaque balance sheets you can find. I think from a regulatory perspective, their balance sheets are really strong. So a lot of the worries that were in the last cycle don't exist in this cycle, not in the big banks or the regional banks. The one I've followed off and on over the years is US Bank, because it's a nice regional bank, conservative credit. They usually pay a pretty nice dividend yield. I haven't followed them in several years, but that would be my go-to bank if someone forced me to buy one.
Dan, it might not have been you, but it seems like somebody on our panel in the last year was concerned about regional banks. It might have been you. Was that you, if you remember, or have you changed your view on that, or if that was you?
It doesn't seem like something I would say. Maybe I said something like that. I don't know.
Okay,
no,
it might not have been. I might be thinking of somebody else.
I haven't been too excited about it. I know there was, you know, I follow the retail industry or the real estate industry, and I know some of these banks were full on multifamily and they couldn't turn, right? Because they weren't stabilizing. I think that's mostly resolved, and plus it's such a small portion of bank balance sheets, right? But the regionals and definitely the local banks would have issues with that. But I think if you're looking at, U.S. Bank or Chase or, any of the Citibank, all those banks, they're, from a regulatory perspective, they're fine. There's not the skeletons in the closet that there were, 15 years ago before the financial crisis or whatever. So,
yeah,
I think the banks are in good shape. I wouldn't expect huge earnings growth out of them. There is some better spreads available. They can borrow short and lend long and make a little bit more spread than they could when the yield curve was flat. As it steepens, that certainly helps them for sure.
Definitely the yields and the direction that we should be going in with the Fed this year is a benefit, and the regulatory environment is more of a benefit than it has been in a while. So I definitely agree with you on those points. Glenn, what are your thoughts about the banks?
I'm debating this right now. I've considered MasterCard and Visa and Bank of America. I think, like Dan said, they're generally stable. However, there is one potentially downside is that supposedly in the U.S., half of Americans who have financial loans on their cars are around $6,000 underwater because during the pandemic, they were buying cars that were way overpriced, and now they're so far underwater that they can't sell the cars and they can't buy a new car. So that's going to affect all these companies, and there might be a potential for what do you call them, repossessions. So that's one thing with the banks. But I'm going to go with Citigroup. The symbol C. They did 64% in the past year, so they're doing actually, I think, better than MasterCard and Visa, which are doing about 12% each of them. So their dividend is about 2%. Their PE looks reasonable at almost 17. A PE of 17. That almost seems like insane because so many PEs are so gigantic nowadays. So PE of 17 on Citi with that kind of return, I think they'd actually be they seem to be doing pretty well right now. Their chart seems to be going in the right direction. So I think I'll go with Citi for this year, or at least for this month.
Citi has been a good one. I'm a happy shareholder in Citi myself. I think that's a great pick. And I'm optimistic for the banks. There's a lot of good things working in their favor, like we just discussed. I think a lot of them have had some good runs over the last year, though, as well. Citi's had a great run. Wells Fargo's had a great run. JP Morgan's had a great run. I've been in some regionals too. I'm a holder of some Huntington Bancorp. I think even SoFi, that's had a great run, but I think that's still got some opportunity. I think if I was going to pick one to go into this year, it would have to be Capital One with their acquisition of Discover. I think they have some good growth coming yet too. So that would be mine.
Yeah, I like that idea, Tony. I've had that in my radar for a while.
I hadn't even heard about that acquisition. A merger, or they're actually buying Discover?
They bought out Discover.
Bought Discover. Yeah. Wow.
Yeah.
Is Discover in any way still connected to Sears in any way? I know they were the ones who started them years ago. They were spun off.
I don't think Sears is attached to anything anymore.
Well, yeah,
I don't know if they have any stores.
Would have been the last
Morgan Stanley held them for a while, and then they spun them out.
Yeah. Okay, guys, let's move on and talk about the Fed. Big year for the Fed. with President Trump going to be announcing a new Fed chair anytime soon. Of course, he's supposed to take over around May. Any predictions on who the next Fed chair will be? Obviously, there's a few front runners right now. Does it matter to you guys? What do you expect from them? How do you think it'll affect the markets?
In my humble opinion, go ahead, Dan.
I mean, I don't follow the individuals. I know the political landscape's going to push towards, easing rates even further. So I don't necessarily think that's a good thing. I think inflation actually is a thing that we should be paying attention to. If the Fed's acting prudently, we should be standing pat right now, maybe one more cut. But all bets are off the second half of this year. So I don't know.
Yeah, Glenn, go ahead.
Jerome Powell, he's done a pretty good job. I'll give him that, considering that Donald Trump's the one who actually put him in, right? And, I've seen the picture of the boardroom where they all sit, and there's a giant oval table with 50, Fed Reserve, board guys from all the states. And it's like, hopefully these people, they live in our country, they go grocery shopping, they buy gasoline and electric cars or whatever. So they understand, hopefully better than most people. They get the data better than anybody. But, we've always talked about this is they can only respond in a certain way. You can't go too hardcore because you don't know what's coming down the path. So they always have to be conservative. That's my fear, that if they put somebody in there, one of the things about the Fed is that it's been it's designed to be immune somewhat to political manipulation, but this could change that. And people think you can go to zero. You can't go to zero. The market, the financial mechanism doesn't work that way. You need a little bit of interest. If you didn't have any interest, like you said, then it's like it doesn't work right. The economic system doesn't work right. You need a little bit of interest, So,
well, that's a good point, Glenn, because, when people get all worried about the debt, I've tried to explain to people too that, hey, if the country had no debt, nobody could invest in treasury bonds because that's what our debt is.
Yeah.
And that's a good stable return for a lot of people. So it's very, interesting when you start getting into that. And your point is that, yeah, you do need some interest. So I think that it's going to be an interesting year. There's no question that we're going to get some cuts with the new Fed chair because that's what the president wants. I'm not too worried about the inflation. I think it's going to iron itself out. Realistically, I think because of technology and things like Amazon, we were in a world of deflation, leading up to COVID, and that was a generational thing. And I have to give Chairman Powell a lot of credit too. I'm glad you brought that up, Glenn, because I think he did a great job navigating through, a crisis like that. Yeah. I mean, that's a once every 100-year type of a crisis. Yeah. And I think he's done a really good job. So, and through the political landscape for sure. So, I'm not. I think there's enough checks and balances that we're going to be fine with whoever it is. Part of me wants to pull for Rick Reeder just because he's the underdog right now and he's the most unpolitical of any of them. But it's right now, the probabilities are it's going to be one of the other guys that has been around a little bit and more associated with the Fed for a while. So we'll see. I don't particularly have any favorite other than I love pulling for the underdog. So.
Yeah.
Guys, let's wrap it up with our final question as we usually do. What would be your best stock pick today if you had to buy something today and why? Dan, you want to start us off with that one?
I can start off. I've been looking at Adobe lately. I mean, this is a company that's got a PE of 20. They're growing at, revenue at 10%, a little bit more than that's fallen to the bottom line. They bought back 26 million shares last year. So it's one of these companies that's just I think they have a 55% return on equity. So they print money They still have a ton of money to put into R&D, to buy back shares, and they're still growing. It's depressed lately due to concerns about AI kind of overtaking their business. And I think those may be a little overblown. Adobe has the cash resources to invest in AI and bring that to their customers in a way that's complementary to their business. So I like Adobe right now. It's cheap. It's as cheap as it's been in a long time, and I think in 5 years you'll be pretty happy you own it.
I think that might be a nice pick. I'm going to have to take a deeper look at it again, Dan. I felt like I missed Adobe because I had strong feelings that, great company, great products. So I think that could be a great pick. And now that it's pulled back a bit, maybe the time is right for that. So that's a good one. Glenn, what are you thinking?
In reference to Adobe, I've had them for 20 years because, like you said, they're a machine that prints money. Right.
Exactly.
And the AI thing is that if people can go do AI, they might not need Adobe Photoshop or Illustrator, but like you said, they have cash to kind of do that too. So they're kind of in a, it's like if Kodak had cannibalized their own market and went to digital, they would have controlled the digital market, but instead they stuck with chemical-based photography. So maybe AI is the next thing for Adobe, where if they embrace it, they'll be the ones who cannibalize their own market and they'll control it, something like that. So anyway, my pick is, I'm going to go back to one I did a little while ago, is Western Digital, WDC, and they make hard drives and storage. And if you want to build a data center, you need storage, just like you need CPUs and GPUs and electricity. You need a lot of storage. The thing is, I've had them in my account in the past. And because they're a commodity business, they haven't moved for years until like the last 6 months. And then they've started to take off, because I think what it is that when you build these models, you need so much storage because you're constantly changing. When you build large language models for AI, they're gigantic. They're hundreds and hundreds of gigabytes, if not terabytes. And then you build a new one, and then you build a new model, and then on and on. It's like version 1, 2, 3, and 4. You need another 4, 8, or 20 terabytes. And I think that's kind of what's pushing the market here. And it's beyond just a commodity thing, is that you need an incredible amount of storage. They want to do things now called, they're called like world models, right? It's an actual or a digital twin. That's the better term. So you have a digital twin of the world, or a digital twin of the weather system, and that just requires just petabytes of storage. Like the James Webb Telescope generates something like 20 terabytes a day of storage. Just one day is 20 terabytes, and that that's all year long. So the incredible amount of data people are generating with cameras and 4K is just that it's got to be what it is. That and the AI data center. So that's my pick for right now: Western Digital and storage.
And it's just had a big pop with all the news about the shortage of storage. I know it's pulled back a little bit from this recent big pop, but what a run it's had. I wish I had held that line, because I used to have some.
Yeah.
But I got out of it at a profit. So I can never complain about taking a profit. But I'm going to give a one that I've talked about several times, because I think it's still a great, strong pick for this year, which is Boeing. The back order, they just got another big order from Alaska Airlines for like 100 planes. They are just so far back ordered. It's a duopoly. Boeing is trading, I don't even know where they closed today, but they were around 230. I think it might have closed a little bit below that. But I have a price target by the end of this year of $300 for Boeing. And so that's in putting in a 30% run during 2026. Not only is it the commercial planes, but they are a defense contractor too. So they do some defense work, and there's certainly, with everything going on in this world, some work for them. They recently were awarded some government contracts as well. So they have a fairly new CEO, and this is a big turnaround story. And I think this is a year that we see Boeing break back up toward $300. So
Nice.
Guys, great talking with you as usual. And to everybody out there, for more investing information, please visit our website at marketocracy.io. And to learn more about the Masters and their model performances, please visit marketocracymasters.com, where you can invest right behind our Masters portfolios. And we will see you all again next month, and have a good day.
Thanks, Tony.
Thank you, Tony.
Okay.